Getting a mortgage, it can feel like trying to solve a puzzle in the dark, right? All that paperwork, all those rules. But here's the thing. All that complexity, it was actually built on purpose. And believe it or not, it's there to protect you. So today, we're going to flip on the lights and show you exactly how this whole process works, and more importantly, why it's designed the way it is. I mean, if you've ever even thought about buying a house, you know this feeling all too well. The mountains of paperwork, the confusing lingo, the seemingly endless steps. It's just this maze. But this isn't some accident. This whole complicated system was designed intentionally, really forged in the fire of a massive global event. Yep, you guessed it. Pretty much everything about the mortgage process today is a direct result of the 2007-2008 financial crisis. Back then, risky lending was rampant, and it led to a total global collapse. So to really get why the rules are what they are today, we've got to go back to where it all started. Okay, so here's what we're going to cover. We'll kick things off with what happened right after the crash. Then we'll meet the new sheriffs in town. The laws and agencies that were created to make sure it never happens again. After that, we'll look at how the government actually steps in to help, check out the different loan options you have, and then we'll wrap up by breaking down those final crucial steps, valuing and paying for your new home. All right, first up, the reckoning. Every single piece of paper you have to sign, every pay stub you have to scan? Well, the why behind all of that starts right here, with the moment the old system completely fell apart. Think about it like this. Before the crash, lending was kind of the Wild West. The standards were super loose, and there was just risk baked into everything. And when millions of those loans went bad, which, let's be real, was inevitable, it triggered a global financial earthquake. So the big takeaway from all that wreckage was crystal clear. The system needed a total rebuild, from the ground up, and this time with a brand new focus, protecting you, the consumer. So all this chaos led to a brand new era of oversight. Lawmakers basically had to create a whole new rulebook with new watchdogs to police the financial industry. So let's meet the big ones. Okay, the absolute centerpiece of all this reform is something called the Dodd-Frank Act from 2010. You can pretty much think of it as the master rulebook for how finance works now. And its mission, while it sounds simple, was absolutely massive. Make the entire U.S. financial system safer for regular people and taxpayers. So, what did this huge law actually do? Well, it did three really crucial things. First, it created a powerful new consumer watchdog, the CFPB. We'll talk more about them in a sec. Second, it established this game-changing idea called the ability to repay rule. This basically forced lenders to prove you can actually afford the loan they're trying to give you. And third, to stop home values from being artificially pumped up, it puts strict new rules in place to make sure property appraisers are totally independent and unbiased. All right, next up, we have the SAFE Act. This one zeroed in on the folks who are actually creating the loans. It basically professionalized the whole industry by making sure mortgage loan originators are licensed and registered. It set a national standard to stop the kind of shady lending practices that got us into that mess in the first place. Okay, let's circle back to that watchdog I mentioned, the CFPB. This agency is the government's powerhouse for consumer protection. The best way to think of them is like a referee on the financial field. Their only job is to make sure banks, lenders, everyone is playing by the rules and treating you fairly. And believe me, their job is huge. They're constantly on the lookout for any unfair, deceptive, or abusive practices. They enforce anti-discrimination laws. They even track and analyze consumer complaints. Bottom line, they were designed from the ground up to be your advocate when you're dealing with the financial system. Okay, so we've got the new rules. Now let's meet the key players you're probably going to hear about when you go to get a mortgage. These are the government-affiliated groups that play a massive role behind the scenes. First up is HUD. That stands for the Department of Housing and Urban Development. Now, these guys have actually been around since 1965, and their mission is enormous. Create strong, sustainable communities and quality, affordable homes for all. They're the ones behind fair housing laws, and they oversee some of the most critical home loan programs out there. All right, I'm sure you've heard these two names before, Fannie Mae and Freddie Mac. They are absolute giants in the housing market. But here's a key thing to understand. They don't lend money directly to you. Instead, what they do is buy mortgages from your bank. This frees up a ton of cash for the lenders, which means they can then turn around and issue more loans to more people. And here's a little inside baseball for you. They each use their own automated system to underwrite those loans. This is actually a big reason why you might get approved by one lender but denied by another, even for the exact same loan. It often just comes down to which system they're using. So we've got the rules, we've met the big players, but how does all of this actually help you buy a home? Well, it really boils down to a few key government-backed loan programs. Each one is designed to help a different group of people get a shot at homeownership. Okay, let's break down the big three. First, you have FHA loans. These are fantastic for buyers who maybe have a lower credit score or can't save up a huge down payment. Then there are VA loans, which are an incredible benefit for service members and veterans, and they often require zero down payment. That's right, zero. And finally, you've got USDA loans, which are all about helping to develop rural areas by offering 100% financing to home buyers in eligible parts of the country. All right, we're heading into the home stretch now. Let's talk about two absolutely critical concepts that pop up right at the end of the mortgage process. First, figuring out what the home is actually worth, and second, the plan for how you're going to pay it all back. Okay, first up, the appraisal. And let me tell you, this is way more than just a formality. It's a super important safety check, and it's mostly for the lender's benefit. Basically, an independent appraiser comes out to figure out the home's true market value. This is to make sure the bank isn't about to lend you, say, $300,000 for a house that's really only worth $250,000. It's all about getting an unbiased validation of what that property is worth. So how do they figure that out? Well, appraisers have three main tools in their toolkit. The one you'll see most often for a regular home is the sales comparison approach. They just look at what similar homes or comps nearby have sold for recently. Now, if it's a rental property, they might use what's called the income approach. And if you're building a brand new house, they'll probably use the cost approach to figure out what it would cost to just replace the whole thing from scratch. All right, so the loan's approved, you've got the keys, and now you start paying it back. Well, that whole repayment plan has a name. It's called amortization. Just think of it like a super detailed schedule. It shows exactly how each of your monthly payments get split up. Part of it goes to paying down the actual loan amount, that's the principal, and the other part goes to paying the interest. It's the roadmap that makes sure your loan is paid off in full by the very last payment. So, what's with this number, 360? Well, that is the total number of monthly payments you'll make on the most common type of mortgage in the U.S., the 30-year fixed-rate loan. Right? 30 years times 12 months a year, that's 360 payments. It's a really powerful reminder of just how big a commitment homeownership is. So, when you think about the crisis and all the new laws and this whole complicated process we've walked through, it really all comes back to this one simple idea. The entire system, as much of a headache as it can be, was totally rebuilt with one goal in mind: making the financial world safer for all of us. And that really leaves us with one big question, doesn't it? We've broken down the why behind all this complexity. We've seen the new rules, the watchdogs, the safety nets. But is it actually enough? Is today's housing market really safe from another huge crisis? You know, that's a question that every single one of us has a stake in. Thanks for joining me for this explainer.